can ask questions and they'll answer what they can. What we'll do is we will email the presentation to everybody. We'll put it on our website. We'll do something to make it available. So anyway, from AJ Gallagher, I'm really happy to introduce Michael Gillon, who has been our broker for the last 6 years, and Brandon Butterworth, who is his new assistant and will be taking over our account in the future years. Since Michael's been promoted to take over the whole Orlando operation. Anyway, they're condo experts, and go for it.
Again, sorry for the technical difficulties. We will send the PowerPoint to everybody via email or fax or whatever you would prefer. But the intent of the presentation was just to outline the coverage that the association provides for the buildings versus what your coverage responsibilities are as an owner for your own items. So what and what we would go over here is what the association provides. Well, the association buys full coverage, including wind, fire, and all special insurance perils for property to cover all of the association and common element buildings. In addition, they conduct annual replacement cost appraisals to determine what the current replacement cost of the building is and insure to those limits so that for increases in construction costs, inflation, things of that nature are contemplated in the limit of insurance that's purchased so that we have full coverage limits. The deductible that applies on property insurance for the association building is a $5,000 deductible with the exception of hurricanes, which have a deductible of 3% of the building value per occurrence. In a letter that we send out to everybody each year, we quantified that 3% hurricane deductible amount and what that is per unit owner, because there is a coverage on your own policy called loss assessment coverage. Carriers are required in Florida to give you at least $2,000 of that coverage. But what that coverage is there for is if there is a large loss that impacts a deductible that causes an association to assess owners for the deductible, your own personal policy would pay for that assessment or the portion of that assessment that's because of an insurance deductible. So in the letter that we send out every year, we say, for each building, whether, say it's $15,000, if there was a total, if there was a full hurricane loss and your full deductible was used, you could be assessed up to $15,000 to cover your portion of the deductible. We recommend that you ask your personal insurance carrier to increase the amount of loss assessment coverage to at least $15,000 so that if there is a major hurricane loss, you don't have to pay any of those deductible assessments out of pocket. So that's that's probably the biggest deductible exposure that we have, because in Florida, just by the nature of where we're located, the likelihood of hurricanes, things of that nature, hurricane deductibles are percentages of building values are large amounts. So keep that in mind. I'll also, when I send this email out, will include a copy of the letter that was sent out to everybody last year that tells you that exact amount so that you can ask. I don't think that it's typically a large charge to increase that limit. So if there's one thing to take away from today, for a minimal charge, you might be able to up that limit if we ever, hopefully we won't, but if we ever had a large, wind or hurricane loss, that you wouldn't have to pay anything out of pocket for the deductible on the building coverage. Let's see the next. So the association, just some items that, in general, the association is supposed to, cover all portions of the condominium as originally installed or replacement like kind and quality, which include the following: drywall, unfinished walls, unfinished floors, interior doors, interior non-load-bearing walls, closet doors, closet rods, bathtubs, sinks, toilets, and heating, ventilation, air conditioning equipment. So, those are the items that when we do the appraisal and when we provide the coverage for the association buildings, that they're responsible for covering. When it says unfinished walls and unfinished floors, that essentially means any coverings or additions that you put above the, bare floor or bare walls are owner's responsibility for insurance standpoint, but the actual wall and actual ceiling and floor itself, unfinished without those additions, is covered under the association policy.
Michael, what about the windows?
The windows, the exterior windows are also a part of the building. Now, the key distinction being there, that's gonna cover them to the original line of quality as built. So if you do an upgrade of your windows, you would want to increase the limit on your personal policy to make sure that you were getting full insurance for, that upgrade amount.
When you say exterior windows, does that include the doors too, the sliders?
Yes. Anything that's on the outside of the unit itself. I mean, an interior, anything that's on the outside of the building.
That's part of the association coverage.
Yes.
My understanding is if you have upgraded your unit, you put in new toilets and new bathrooms and all that stuff, have you lost that coverage because it's no longer as originally installed? Or is the limit simply the amount of what was originally installed?
The limit is set based upon, that, basically
There's usually a sub-limit for tenants improvements and betterments, so you don't have to report that you've upgraded
you don't need to
something,
worry
but there's a
about that
sub-limit.
necessarily.
It's usually 25 to 50,000 included. You can increase it, but that's under the association. It's covered. You don't have to have a specific schedule. You don't have to tell them you have the tub upgraded. It's just
What that sounds though then is there's a certain amount of coverage in the association for the things inside the unit that were originally installed. And if you have a complete loss, you can get paid that amount. You're just not going to get paid any more.
Right, and so if you have things that you've done, substantial upgrades and things of that nature, need to be taken into consideration when you set your own insurance limit. I mean, if you do alterations, if you add things that, improve upon the unit based upon the original construction, there are two limits on your own personal policy: contents and building. That building limit is meant to cover upgrades and substantial things that you do to improve the unit beyond its original condition. So if you have anything substantial there, I would recommend to make sure you have coverage on your own policy for that, because in the event of a total loss, they're doing an appraisal based upon what the average is for that.
Tell me what, under my own homeowner's policy, would I do that to everything in my condo is upgraded?
Okay, there are two coverages. Yes, there's a building, and then there's a personal property, or sometimes called contents. Personal property and contents would be, furniture, equipment and then building. I think sometimes they're referred to as coverage A and coverage B on that form, but what they're listed at is building and personal property typically.
So building covers any cabinetry, appliances, new plumbing, new water heater.
Things that you've added in, that are above the original quality. So, or if you added in, say, if you built in a new addition or room or wall or something like that, you'd want anything that you've added to improve. Now, just the basic package that would be as it was built, you don't need to cover that on your personal property because it's covered by the association, but those improvements that you've done in those areas, you should contemplate that in your own. Sometimes they even do they'll do just you may see that it's just a factor, like if you have $100,000 listed for personal property, they'll put in automatically 50,000 buildings. So a lot of times people don't look at that. Sometimes it's good to look at that to make sure it's at the level you need for what you need covered. Yes, sir.
Does this all presume that if there was a terrible disaster that we rebuild the units? What happens if in the scenario of something god awful where the town requires that the whole building come down, that it's not inhabitable?
In that case, essentially what's going to happen is we have a limit of insurance both for wind, for flood, for fire, that, is up to what is appraised as the full building value. And in that instance, the association would get a check for that policy limit amount. It to the association and its members and board to decide, to make that decision.
Less the deductible.
Less the policy deductible.
And that would not be contingent on whether we elected to rebuild the unit as opposed to just take the check and leave?
Sometimes, now, and it depends on what type of loss it is, but there are distinctions that say, we will pay full replacement cost if you rebuild within X amount of time. And then there are provisions that say, if you choose not to rebuild, we will pay you an actual cash value as opposed to a replacement cost. But it depends on the type of loss. For example, the flood policy might pay you the full limit regardless of either, where the wind policy may say, we're gonna pay ACV if you choose to take the money and leave, or if you want to rebuild, we'll pay full replacement cost. So it can depend on the type of loss in the policy terms.
But that's an association decision, not an individual decision.
Correct.
Yes, I was gonna say that there's a provision in the association bylaws. If the whole area was demolished, there's an association provision for a vote as to whether to rebuild. Which vote would be, of course, taken in the context of what the insurance proceeds were and how much it would cost.
Question here.
Yes.
3 years ago, I put all new windows and doors in my condo, and 2 years ago, we started and finished gutting my unit and redid the whole thing. So, and you say, let's say, if I didn't have new windows and doors, and they're kind of warped a little bit, or that's a difference than what I put into mine. And then when we get inside the condo, that has to be all reset again, because there's nothing left when we emptied it, there was nothing left other than start to reload it. So.
And I think it's the scenario to take into mind there, being in a smaller loss where it's only maybe impacting some common element in one unit. They may not be looking specifically to say, well, this is as built and we're only going to pay you, $500 and it's really worth $1,000. What we're looking at is a scenario if there's a total loss, we have a finite amount of coverage that's been, that's available for the building. And that amount isn't necessarily contemplating things that you've done from an upgrade perspective. So, in the event of a major total loss, the amount that the building has, may not be there. There may not be enough to cover things if you've done substantial additions. So you may not need to, if say for round numbers it costs you $100,000 to do that upgrade, you may not need to put all $100,000 in your building limit, but you may want to put a portion of that to recognize that you've upgraded. It's not necessarily, there is some value still there that they're going to pay you for those things. And what we're saying is, you've got an appraisal that says this building is worth X based upon the way we know it was constructed. And then you've got 181 people that have added different things over time. If this building burned down or was washed away today, what we're going to come up with is to say, okay, say the building everything here is worth $100 million. But that doesn't contemplate $40 million worth of extra things that we're putting in the units by people. If you're not covering those on your personal policy, in the event that we have a large loss, there may be a situation where there's not enough coverage for that. And specifically on larger, items like if you put in an impact-resistant glass versus the glass that was here, you're definitely going to want to cover that on your personal policy to make sure you have enough limit to replace those expensive windows. So, it's not necessarily having to nitpick every little thing, but major expenses that you've made, you want to make sure that there's some building limit to cover that, because those additions are not contemplated when the building limits are determined by the appraisal company. They're not it's not feasible to go to everybody and say, how much do we have for you? So it's a good thing to do to evaluate, what you've invested in there and what you feel comfortable with, making sure you have an additional limit of that for your personal policy.
Got it.
And then, so what the association policy doesn't cover, or the items that you would be looking to cover on your own personal policy, would be, like I said, the coverings of floors, walls, ceilings, electrical fixtures, appliances, water heaters, built-in cabinets and countertops, window treatments, curtains, drapes, blinds, hardware, drywall that was inserted by the owner after the initial construction, or the additional cost of upgraded walls that you've put in. And then, really like I said before, any interior additions that are not of like, kind, and quality of the original building items. Essentially, that's sort of a catch-all of all the build, other than your own, obviously, personal property and furniture and things like that, parts of your unit that you should have covered and contemplated when you set your limit for your building coverage for your owner's insurance policy. Because those items are not contemplated in the limit of insurance for the association.
You keep referring to fire and wind damage. What about water damage?
Water damage that is also covered under the property policy, and the same distinction upon, what's an association's insurance responsibility versus yours would apply to water damage.
So that whatever you're talking about, all three damages are equivalent, is that correct? Okay.
Yes, there's no distinction between, so the insurance requirements are the same for any type of property loss, whether it be flood, wind, fire, sinkhole, any of those, it's all the same.
Imagine this building code.
So to boil it down, basically, it's the outer structure that comparable to the original structure of the unit that the flood insurance covers.
Well, flood, we're getting different, there's a little bit of difference in what the flood policy covers, a few more things than the property does, but basically, yes, I mean, it's covering the building itself, and, a lot of people say, okay, from the walls in, well, this is just a more detailed description of what that really means.
But anything we put into the unit is not covered. Any upgrades we put in is not covered.
That's correct.
To the walls or the floors or anything like that.
That is
So
correct.
it's the outer structure to rebuild the building.
Yes, correct.
Got it.
And so there is some amount that's put in there for the basic walls, floors, things that were there as it was built, but anything above and beyond that, you should be covering on your
Right,
own
so
policy.
that's where homeowners comes in,
Yes.
your own personal. Now the question is, if you're on the 6th floor of your building, what kind of coverage does the flood and the wind include if your unit wasn't damaged, but, the outer, maybe the lower levels were? What level of insurance should people have if they're higher up? Should it be different?
I mean, I would say no, because, the limits that we're looking to buy are not, they're catastrophic, coverages that we're talking about. Flood, what we're talking about here is a storm surge. Hurricane is windows that could be blown out with water driven in on any floor. So I wouldn't feel comfortable telling, although it does make logical sense, and you may want to make that decision on your own, that if I'm on the 11th floor versus on the first floor, I might have less exposure. I wouldn't advise anybody to make any adjustment to their insurance values because of that. The value of what you have is the same value regardless of what floor you're on, and you shouldn't reduce, I wouldn't advise somebody to reduce their values because of being on a different floor.
Is there a percentage of that you can, like you've done all new, everything in the condo that's changed. When you go to add on to your personal insurance policy, is there some guideline how much you add on to it?
I don't know, are you aware?
Well, depends on what you're replacing, but
Walls, floor,
if you wanted to be careful, I would just get a personal property appraiser and confirm the limit. Otherwise,
or would you use the value of what you paid for it?
Yeah, what you paid for it might be a good estimate. There might be some amounts you could exclude from that if you're replacing things that are actually part of the original, but that might be a good place to start, because that's going to include the labor, materials, and all that. And you know, if that was a few years ago, you might want to adjust for inflation and increase material costs. Yes, sir.
I think probably most people have the same situation. My personal policy is wind only. So I'm not covered for any water damage, right?
Do you not purchase just a policy that excludes wind, that wraps around and provides all the other property policy, or all the other property coverages other wind? Because typically, you'll have, in that situation, two policies, one wind only, and then one that covers everything else but wind, which actually should be far less expensive than the wind policy.
I don't think I'm covered for non-wind.
I would, if I were you, I would contact the agent that places your wind policy and ask them, you know, if you're not covered, to get a quote for that, because that should be
What if you have a fire?
inexpensive.
No, it covers for fire, but it specifies, says wind only.
Well, that, you probably have two separate
Two
policies.
separate policies.
Yeah.
So what happens is, because we're in a coastal, high hazard wind area, you're eligible for Citizens, which issues policies that just cover wind.
Yeah.
And so in that case, you're probably buying a Citizens policy for wind, and then another carrier is giving you all your other property coverages, just excluding wind, since you get it somewhere else.
All right.
Michael, I'd like to hear you talk about the surprises that we might see in the event that we have a big loss from a windstorm. So the first surprise that we might see is the fact that we've got a deductible. And it's a 3% deductible times the whole value of the building.
Yes.
That has to be paid before and they pay anything. In other words, the loss has to exceed that
Right.
before they pay the first dollar.
Right.
Okay. The second thing is, what's your experience on the other coast where buildings have been damaged? Did anyone require that the windows that were replaced be Miami-Dade compliant?
We've seen that happen. I mean, if that is the actual current building code in that area, which I think in most coastal
Does that
areas.
happen when a lot of windows are gone or just some of the windows?
It happens, I believe, when the building has reached a state where it needs to be completely rebuilt. I haven't seen that requirement as often in partial losses, but in total major losses where they're looking at rebuilding the building, that's just one of a whole host of other code-based items that you'll find are more expensive and, you know, that are above and beyond what the original condition of the building is.
So we could be looking at $100,000 additional costs, so it would be between $50,000 and $100,000 additional costs if someone said that we had to put all Miami-Dade windows in, for those of us that haven't done that.
That could happen, yes.
That's another surprise. What about mold?
For mold, that is something that is typically, you know, excluded. We've looked at adding it before as far as under a pollution policy or things of that nature, but the coverage that is available from a property form is usually very small. It's not a large sublimit for that. So there is a potential exposure if there was a major mold issue at a building that caused property and remediation costs or even liability, that you know, that would be something that's excluded right now under property and general liability policies. You can buy separate policies, pollution policies, that cover both cleanup and third-party liability. Right now, we don't have that. We've presented quotes for that to the boards, but it's been cost prohibitive, where we felt that, you know, the coverage that we're getting for the premium wasn't worthwhile. So there is an exclusion for mold on both of those policies at this time.
The 3% you've been talking about is 3% of what?
3% of the value of the building. So
The appraised value.
the appraised value of the building. And when I send out this presentation, I'll send exactly what that amount is and what the 3% equals for each building, and then broken out by unit, so that you see that amount. But yes, and that would, you know, if you have a percentage deductible on your own personal policy, it applies the same way. It's 3% of what your coverage limit or your value stated for that building is.
But your insurance basically covers the units as originally constructed. The drywall, the bathrooms, the kitchen.
The exterior walls, the windows.
But
So if there's a fire and a replacement is necessary, the drywalls would be replaced under your policy, under the building policy,
Yes.
not upgraded drywalls or unusual or new drywalls.
Right, the coverings or, those things that you've done, you'd have to look to your personal policy to have that. So there's got to be coordination in those types of losses between our adjuster and the owner's adjuster.
Okay.
Yes, sir.
I might make a suggestion, the question of mold came up. On some of the individual policies that you can buy on your property, there is an option to buy mold. It was, in my case at least, surprisingly reasonable, at least I thought so. And the lots was either, I think it was 25 grand or 50 grand. And as a general statement, buy as much as you can buy.
yeah, so.
Maybe you should say something about the fact of our landscape.
And the other item to take into consideration as far as, things that are not covered under the association insurance are plants, landscaping, things of that for wind coverage are excluded items. So in the event of a, major loss that affected those, that's something that, potentially could be an assessment exposure if there's a large cost of replacing landscaping after a windstorm. And the reason why they're not covered is just basically that, that's not commercially available. Carriers are not offering to cover, at least here in other areas, if you're in the middle of the state or in the Midwest, you might be able to get it, but there's not a substantial coverage available that says we're gonna cover your $15 million worth of landscaping. So it's just something to note that, another reason why you might want to increase your loss assessment coverage, because, if you're assessed, that could be applied to it as well. There's not wind coverage for those items.
But there's 18 acres of landscaping here. Oh, wow.
I mean, it's a big exposure. It's just not, it's not something that as the market is now for wind coverage in this area, there's not really a reasonable option to say we're going to cover that large amount of landscaping for wind damage like we would cover a building.
If all the windows in the entire building were changed, would that change the cost of, do we put, for a loss of a window, is it increased, or like in building one, the whole building had new windows? So is that in the original appraisal of the
If-
building?
I'd have to look, if the whole building itself was upgraded and
Upgraded.
changed,
Right.
then yes, you could declare that as,
The
the
original?
building's been upgraded to this, we're covering the full building for this. The problem comes in is usually you don't have that situation where you have everybody doing the same thing. You have some doing it, some not, and things
Well,
like
we
that.
did, the whole building.
So wouldn't the association be buying it if they knew that there was a building that was totally?
There's annual appraisals, so the value would be updated each year.
And so depending on, if that, I think the appraisers come out every summer, I believe. And so then they assess the windows, they assess the building, and then so if the entire, if that point in their appraisal, it's, disclosed to them, we've upgraded all the windows in this building or we've replaced it, they're gonna take that into consideration into the building value. What we're talking about are situations where it's not a building decision, it's an individual decision, and I'm doing this, but maybe not everybody in the building is, you need to take steps to make sure that's covered on your own. If it's a building upgrade that the association's doing across the board, then, and that should be in the appraisal.
But the community association here, which owns the basic property, other than the property underneath the building, insures the buildings also, does it not?
No, each individual association has, now there are some policies where for purchasing power that all 5 associations share coverage, but for windstorm, flood, almost every liability coverage, every association has its own specific policy with its own specific limits. The exceptions to that are for property coverage for everything but wind. we buy a policy that everybody shares in that has full limits. And that's really just for group purchasing power for that, fire and other perils coverage. And then an umbrella policy that provides a $50 million liability limit for any liability claim that exceeds the underlying policy. That's available to every association. And then there's an excess flood coverage that's purchased to get full flood coverage for all buildings. That is, again, the full limits are purchased. It's just a group purchase so that every association is named on the policy. Every association has full limits on the policy. You just get a better premium as a result of banding together than you would have individually. But except for those three policies, everybody has individual policies in the name of each association with their own dedicated limits. And on those, there's no real sharing of limits because the declared value is up to the full stated value for every single association.
So each individual building insures its own value of its own building as originally constructed against fire and other casualty risks. Is that what you're saying?
Yes, but they do it all together on one policy.
Okay.
So
They do it all, you mean all the buildings?
yeah, all buildings are covered for property losses except wind and flood. Those are their own separate policies. For that all other property, there's a master property policy that names all 5 associations and covers the full limits of all these buildings as a group. And that is done because there's a better premium rate that's received by everybody by banding together to buy the coverage.
So the individual buildings are not negotiating their own fire insurance coverage. It's part of this master policy.
Well, when those quote options are given, the presidents of each association are presented the options and they decide as a group. And there's a committee that has representation for each association.
Right.
So before I fall asleep, I'm sorry.
Sorry.
No, when you send that stuff out to us,
Yes.
take a unit, an owner, could be me or anybody, and tell us what are bullet points, what things should we absolutely look at from the top to the bottom, so we have something.
Okay, and I apologize, I would have had that, right here on the slides, that technical didn't send that. And instead of just burying that in the presentation, I'll highlight that item in the email so that it's right out there in front.
Actually, in a big view, that's better off that you're gonna send that than us taking notes.
Right, and then we
It
don't have
doesn't
to.
work out.
Yeah, okay, all right, well, sometimes better to have something to look at than just
Right.
me.
Regarding the flood insurance, are we in this flood
Hazard area.
hazard area, this association?
Are we in a special flood hazard area?
We're technically, yes, we are in a high hazard flood area, which is why we buy, our flood insurance from the NFIP program. Now, I have,
Because I have a letter here dated January 6th, 2014 that says we are not. So have you looked at that recently?
You have a letter from whom?
I have a letter from National Flood Insurance Program.
let me see the letter, because it might be a terminology thing. We're, for the purposes of what's considered a high hazard flood zone.
Because that makes a big difference.
I don't know that, we are in an A zone, so I don't know what,
Because we have called the agency and they said that we're not.
which
We
agency.
call them directly, the flood hazard, whatever, to see if we are, the one that makes the maps, the flood maps. And we were notified that we were not.
I don't see how that could be determined. Basically everything on this island is. Yeah.
Why? Because we haven't had one in so many years.
I would caution you on not buying flood coverage here. zones depending on where you're located, but we are in high hazard flood zone here.
But if we have a storm and there is water damage, let's say I have a unit that does not have flood insurance, but there's a storm and I get a window broken and we get substantial water damage within the unit, that's covered by,
Yeah, so the flood policy, the flood policy that each association buys is, so you have the breakout of what you're responsible for insuring versus the building, which is state statute on that, which, you know, for the purposes of your homeowners, you need to look at that. On the flood coverage, it's a federal policy through the National Flood Program that their policy is a little broader in what it will provide coverage for than what the state statute is, because it will cover, you know, floor wall and ceiling coverings, electrical fixtures, appliances, HVAC, built-in cabinetry. There's a lot of things that the flood insurance will cover under the association policy that the fire and wind policies won't. So when we buy flood insurance for each association, there's a higher limit of insurance for flood than there is for all other because of that. It's about a 20% difference because of those additional items. The reason why we recommend for flood is obviously for your own personal content, but also that, you know, that appraised amount in the event of a total loss may not be, you know, it's an estimate. If you have a lot more ornate built-in things in your unit, you might need it. But you're correct, there's a broader coverage that's provided by the flood policy.
if you had a unit on the 8th floor and you have water damage covered under the basic fire and extended coverage risk, why would you need flood insurance?
That's a good question.
It would be the same reason why, you know, they buy full flood insurances. Would be storm surge, a tidal wave that
That would be an 80-foot wave.
From a storm surge before, you discussed the possibility that the structure of the building, because of the storm surge, would be compromised, right? So it's really a flood that caused the problem, even if your unit's up on top.
I was told it was so that the entire building was condemned.
right, and the building could be condemned as a result. I mean, I don't know that the whole building would be knocked over by it, but you could have sufficient enough damage from a storm surge that may not be 80 feet tall, but does enough damage that it could.
There, if you look at the flood certificate, it will say the base flood level, and it'll give you how many feet up the projected zone is likely to get flooded. It's usually like around 13 to 18 feet.
One more question. If a flood damages the building to the point where the building needs to be condemned, then the general policy for the building kicks in. But from your personal standpoint, the fact that now the insurance company has to pay for the personal property and whatever is damaged, which might be damaged from wind, the wind part of that would cover that, even though the building was condemned because of flood, would it not?
So, I guess I'm trying to drill down on what so the damage, are you talking about personal items that have no damage at all, but they're just...
There's a storm, and it was a combination of a storm surge with a big wave, and it was also a hurricane, a named storm. So there was a combination of damage that occurred in my apartment, both from the windstorm and both from the fact that now the flood has undermined the building and the building's condemned, it's got to come down. So there's two policies that have to be paid for. I mean, there's a policy for replacing the building, but I also lost my contacts because of wind. Or at least that's the theory, because I went on the floor. So, are you saying that if the building's condemned because of a flood, that caused the problem to be condemned, then the wind doesn't count anymore?
I don't
They're separate perils. I mean, the adjuster is going to declare if the damage was wind or flood.
Because it's a true peril.
Right, so there's, you're gonna have to have both carriers involved, and they're gonna agree upon what percentage
Based on
Yeah,
what-
based upon what happened.
Yeah.
As long as you have both covered, you're not gonna have an issue, it's just gonna be the carriers fighting it out. If, you know, what happened in Katrina was a lot of people didn't have flood, and so there still is litigation over what was named storm versus what was flood, and carriers trying to not pay things, but when we have both covered, it's just basically their agreement on whose percentage is taking
But
over.
there's another wrinkle to it, though. Let's say I've got a lot of buildings. I've got new finishes, I've got new floors, I've got all that stuff. The building's coming down. Even though I don't have a damaged unit, somebody's gonna have to pay me for the new stuff that I gotta put into the next building built. Is that covered?
Okay, so
For
you're
what
talking
peril?
about
For
personal?
flood?
So the building is coming down because of flood. There's no damage in my apartment. Okay, so there's no wind damage. It got knocked down because of flood. And because it was flood, somebody could say that you should have had flood insurance on the 8th floor, and you didn't, we're not gonna pay. And the flood caused the problem to be destroyed.
It's gonna come down to what the peril that caused the loss. So in that case, the condemnation was caused by flood.
So if you don't have flood insurance, you're not gonna cover it.
Exactly. I asked this question before, because they said there's a scenario where the building is condemned because of flood.
Yeah,
Your unit is perfect,
yeah.
but because the
Screwed.
building's been condemned, you may not even be allowed to go back into the building and get your stuff out.
That's correct.
And
That's
so,
that. That-
that's exactly it.
Yeah, that's,
So then is that
I mean,
covered?
like, people
You
go
have
back.
to have coverage for that.
yeah.
I
So
have-
and then whether or not,
That's why you can't pass on
same
coverage
thing if you
if you
don't
don't
have
have
wind
floor.
coverage.
I didn't realize that. Is that?
If the flood, if a major flood renders a building uninhabitable, the building has to come down, even though a unit is not damaged at all. The insurance on the flood should cover rebuilding the building to its original condition.
That's correct.
And
That's
then
what,
you'll also have coverage on your homeowner's policy for loss of use, so you can live somewhere else. while
Yeah,
it's being
and for the upgrades.
But we're covered to rebuild the building.
Yeah,
But where you may not be covered is for your personal stuff inside your apartment.
No, that's-
your stuff.
your
That's
own.
the homeowner.
Your own personal
policy.
homeowner policy.
Your own policy.
And your homeowner's insurance might say, it's caused by flood, we're not gonna pay.
The National Flood Program insures contents up to 100,000 per unit.
Well, that's a pretty good question.
but if you buy it.
Yeah. Well,
What was that? Repeat that?
oh, okay.
You're talking about
Yeah.
something, so you can buy up to $100,000 of flood coverage for yourself individually from the National Flood Program. We have full limits for the buildings up to original condition, and along with some interior, there's a additional limit for flood in there that will cover some interior upgrades. And so your main concern, I think, on the flood is if you've done anything that's, basically what if you look at the numbers, you take the fire limit and it's increased 20%. And that 20% higher number is the limit that's bought for flood. That 20% spread is what they're adding in for, interior items that are covered under flood that aren't covered under property. But if you have above and beyond that, or you're not covering your own furniture, electronic equipment, art, other things, you need a flood policy for that too.
Well, let's go over this again. I have a unit, it's on the 8th floor, it's undamaged, but the building is condemned by a flood, condemned as a result of the flood. Now, I have $100,000